the people that you're surrounding yourself with are the huge difference makers for you. And if you can surround yourself with really bright people and you find yourself in a company where you really respect all of your peers, you're definitely on the right track. That's the fastest way to sort of climb the ladder and get smart really quickly.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every single day with a mindset practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal to help you scale and compound your wealth and life so you can give more or all of it away to help MVPs. Hey, I'm your host today, Brett Swartz. In every episode, we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their secrets, principles, values, and wisdom, providing each of us with the insights we need to reach the next level of faith, success, and impact. Hey, I'm super excited about our next guest. We're going to be talking about a really cool subject that I think is going to be super practical, as well as very timely, okay? And it's basically the construction of hyper-scalable finance functions, okay? And that's a lot to unpack, but we're going to be unpacking today with today's guest. In fact, he's co-founded Expo Group in 2017. And he's been acting chief financial officer for over 20 growth stage companies, including Whiteboard Advisors, Pinhook Bourbon. He brings over 15 years of experience in M&A advisory, venture capital, and growth stage operations. He specializes in software, education, technology, business services, and consumer products, and so much more. Please welcome to the show with me, Kevin Gwynn White. Kevin, how are we doing?
Very good. Thanks for having me.
Absolutely. And for our listeners getting to know you just for the first time, would you give us just a little bit more about your story and your current focus?
Yeah, sure. My company Expo Group's based out of New York. I started my career at Ernst & Young, first in their capital market strategy group, and then ultimately their transaction services M&A group. Then after working for them for over a decade, started working for a venture capital fund called Rethink Education. They focused mainly on education technology type investments, so selling to higher ed or maybe some corporate learning. But pretty quickly, after being on the investment sourcing side and M&A side of that, it became apparent a lot of the portcos could just use help getting over the hump for their Series A, B, C. And so started doing that, and it worked really well. And the partners of the fund sort of asked me to full time, and Expo Group sort of bootstrapped from there. And now we've got 50 plus people in New York and Atlanta, and serve several different verticals, but really focus on the M&A, controllership, and CFO space.
Fantastic. And then today's topic, again, is focusing on the construction of hyper-scalable finance functions. So let's dive right into that topic, which, and the question is this: what's the number one secret to building a hyper-scalable finance functions within our companies?
Yeah, so a lot of our clients are growth stage companies, and so what that means, to us is really growth equity focused investments. And so often we have clients that might start at $1 million, and then we're with them through a journey to 50 million top line, right? So when that happens, as you can imagine, there's a lot of disruption, a lot of changes in the operations if you're scaling that quickly. And if you kind of get caught in the back foot with some of this stuff, it can be somewhat dangerous. Everyone's probably had an experience or heard about an experience where they were working at some place that was just using Google Sheets for all of their systems for too long, and it started to break down. And so what we find, and we've now put together finance functions for hundreds of different growth stage companies, is really just matching the software tools out there to what the needs of your business are. In 2024, there's a ton of different B2B software and tools that can be used. And, if you look 20 years ago, you might have had a finance function that required 8 to 9 people that you could probably get away with free for a much, much longer time due to all the great automations out there. But the real key is trying to understand what sort of the key softwares that are actually a best fit for your company are, and sort of when to implement them, because at the wrong time they can be expensive, but if you do them at the right time, it can be incredibly efficient.
Got it. So it sounds like the first secret is identifying the need, the challenge, and then the software that could solve that need or challenge. However, implementation and timing is key factor there. Is that a fair summary so far on the first secret, Kevin?
Yeah, that's right. Because if you think about it, some of the more complex softwares like NetSuite, where they have a lot of add-ons and they're really powerful, and the $500 million top line companies are using these. They're great. They're just expensive to begin with. And so how do you sort of bridge from that environment where you're on QuickBooks and You might be using some sort of amalgamation of several different softwares into I call it sort of like a Lego brick ERP on the back end to when you're switching to NetSuite. Just understanding sort of when the critical factors and sort of turning points in your business happen so that you should actually start implementing the right software.
Okay, got it. And a lot of our listeners are looking to scale from millions to billions, and you've seen perhaps companies do just that, being an M&A. And so how do you identify the timing of such things? I know it's never perfect timing, but what are some of the key questions that someone might ask before they would say, yeah, I need to hire Kevin White and his team to help me implement and to sort which softwares are going to be best for me at this time?
Yeah, sure. So I guess I'll answer one part of that question first, which is sort of when to bring in outside support. Our most common entry point is when there are institutional investors in the cap table the first time. As you can imagine, before that point, if you've got angel investors or you've got sort of a friends and family round, at that point, there's not a ton of scrutiny on the financials yet. It's more about the entrepreneur and the business and how it can grow. The second that you bring in institutional investors, that game changes. And there's multiple stages of that, right? So this sort of the seed investment of $1 million plus, all of a sudden your financials become important. A lot of questions start to get asked on those. And then post Series A, when you start to get into the growth equity space, and you get into serious investors doing 10 million, 20 million plus investments, game changes again. And it's very technical, focused on the financial model, sort of how you over time. So, to answer the question, sort of want to bring outside folks, and I'd say it's a lot of cases founders will either do their own books or they'll have somebody, their cousin Bob is sort of doing the back end on a part-time basis. Once you have institutional investors, and it'll become almost a full-time job just to sort of deal with your board. And that's really the trigger point when you probably need professional help, whether that be Expo or some other company. That's what I'd suggest. In terms of understanding the trigger points, I'll give you two good examples of this. So there are different reasons to sort of level up what your stack looks like based on where you are in your business life cycle and some very specific things that you might be doing. So, for example, one of the most common is QuickBooks does a really bad job of doing multi-entity rollups, right? Intercompany transactions, multi-entity rollups. And so if you're expanding internationally or you have even if you have multiple entities domestically, you can use softwares. We use a software called Join. You can use Fathom. There's a couple different softwares that allow you to roll up multiple QuickBooks instances, but it's really not built for a multi-entity company. And it's interesting. There's a lot of new accounting software, several, I won't go through all the list, that are popping up because of this exact pain point. A lot of people are looking to get off QuickBooks, and then maybe they want to get into something like Sage Intacct or NetSuite. But Sage Intacct and NetSuite are a pretty big jump from QuickBooks to one of those systems, and so there's a sort of a rush into the market at the moment to sort of fill that gap. But so one of those trigger points is I'm expanding and I have multiple entities now. I have more than one legal entity of which I need to keep separate books for tax purposes, but they need to roll up to one single entity so I can manage cash on a consolidated level. So that's one. Another example of where you might want to start thinking about using some clever software is for multi-department FP&A ownership. And so let me show you what I mean by that. They're in very small companies that we see, it's very common for the CEO to really be owning the entire P&L. And so they're the ones that the CFO is sitting with, and we're going line by line. Here's what your sales and marketing expenses look like, and here's where they were over, under what we expected. Here's what your R&D expenses were, and you go through the entire list of CFO. When you're doing that, it's an early stage company. It makes a lot of sense to just use an Excel model because investors interact with it easily. You can pass it around. It's very malleable. Everybody understands the financial model in Excel. Once you start actually getting to the point where your department heads own different parts of your P&L, so now all of a sudden you want the head of your engineering department to control who gets hired in engineering and by when, or you're the head of your sales team to determine when actually they need to bring in a new account rep on. Once you start doing that, then I usually suggest moving away from Excel. That's also the point if you have tons of departments sort of owning all this stuff. usually I recommend that folks should start getting a full-time CFO, or at least a full-time VP finance, because obviously when you're putting budgets together and you're managing lots of different people, it can be a bit like herding cats. But that's when you kind of want to move out of Excel pretty quickly into a different software that automates some of that stuff. One sort of way I kind of look at this is you can get away if you have multiple entities or if you have multi departments not using a sophisticated solution, right? Staying in Google Sheets, you can get away with that for a year, but if if that adds up to 2-3 years, you end up having so much technical debt that you usually have to have a consultant like us come in and re-engineer your entire finance back office, because you're stuck. The books are closing 2 months behind. The board isn't getting what they need, and it requires a pretty massive overhaul and implementation of the right thing. So it's just a matter of not letting that technical debt accumulate.
Okay, so much there. Thank you for sharing that. Wow. So part of what my mind goes to is like the entrepreneur, like hire the who, don't be the how, right? And so you guys want to look at Expo Group because this is what they do, right? expogroup.com. It's going to help you. They're trusted advisors providing their clients with vital expertise at critical moments of growth, right? And they bridge the gap between founders and investors, and they help to build out these types of things with you, for you. Talk about how you best work with your guys' clients, Kevin. Like, who's your ideal, client that you're serving? Walk us through maybe a case study that could help kind of bring this to life here.
Yeah, sure. We work with a couple different verticals. Business services is a really common one. Enterprise software is a really common one. Ed tech, because we sort of the origins of Expo Group are sort of in the ed tech space 6 years ago. And then health tech became a huge one, exploded, and because there's just a lot of specific complexities that we happen to get very good at. And so we serve a ton of folks in the health tech sector. The most common type of company is where our value prop makes sense. And so what our value prop is essentially we can construct a very competent finance resource, single finance resource with multiple people, all that specialize in different things. So one challenge that a lot of folks find is finance and accounting are kind of looked at two separate professions almost. And so often when folks go out and they look for a CFO, they might be looking for a former banker type or someone who's led FP&A at another client for a long time. And then they'll look as a separate role for their controller, right? So someone who's actually doing the accounting and sort of understands the underlying accounting. It's interesting that for whatever reason in this market, there's not a ton of overlap there. So folks that are really good at the FP&A stuff and sort of dealing with the board and putting a model together, thinking about projections and thinking about cash management and funding, they don't necessarily have the skill set or interest in some cases to really get sort of knee deep in the debits and credits piece. Likewise, a controller might really be focused on the debits and credit piece and not necessarily get sort of deep into the FP&A part. So that presents a challenge in that at earlier stage companies, it's expensive to get two separate resources right off the bat, right? And if you find one, they'll generally be good at one of those things, but not the other. And so what sort of works for Expo is we're able to put a team together that's, the cost of a single resource, but is the accounting folks are doing the accounting on the team. They're really focused on it. The FP&A folks, all they ever do is projections, board meetings, and exits, right? So they're really good at that. And then a senior resource who's just sort of very seasoned that can pop into the account, 3 hours a month to get any advice they need. Okay, what's the next fundraising round look like? What's an exit look like? So it's sort of those clients in that space that are really looking for support in that critical growth moment in the, call it $1 to $30 million of top line. It still really makes a lot of sense to do that.
Okay, so that's key, right? So really understanding even the nuance between finance and accounting, controller versus FP&A, right? And Expo being the group that you come in and kind of bring it and have all the key players, coordinating at the right time. Now, are you doing this? Are you outsourced doing this, or how do you integrate within the companies that are working with you? Walk us through like what that looks like.
Yeah, sure. So, and look, we have plenty of competitors, and I think all of them take a slightly different tact. what has set us apart is that we're much more hands-on with our clients. I think sometimes folks are maybe they think of accounting and they want to sort of put someone in a basement and just have financials generated once a month without talking to them at all. That's definitely not us, right? We're like a very, very integrated team who's constantly advising on what the scalability of the function looks like, what fundraising looks like, what good accounting looks like, and sort of how to make it better over time. Yeah, so that's sort of really the key is that piece. Sorry, I forgot.
Okay.
You might have to edit that part out. I forgot what your question was.
Yeah, it's all good. No, I was just saying. Yeah, it sounds like Expo is they are bringing either. Let me phrase it like this. So, Kevin, it sounds like Expo Group integrates or people outsource their needs for financing and accounting is just one way that you guys come in alongside. You guys are very hands on. You guys are a, I guess is it an outsourced CIO or CFO or controller? Like what? How would you phrase that?
Yeah. I think we're both the outsourced CFO and the controller. Typically, we work really, really closely with our clients. Unlike a lot of, I think, of our competitors, sometimes folks are looking for sort of maybe accountants that you put in the basement, and they don't necessarily sit and talk to the board. But that's really not what we do. We're very, very focused on working closely with the CEOs. We use a team-based approach to integrate, and so we'll have someone who has 5 to 9 years experience, depending upon the size of the client, sort of as the engagement manager, and then that person is sort of surrounded by an ecosystem of specialists, right? So a tax specialist, if there's any sort of notices that need to be addressed, or income or sales tax questions. You've got financial transformation specialists that will come in and do major overhauls of accounting systems. And then you have your sort of accounting and finance experts. So that's sort of how we integrate is we put one point of contact, then we surround them by a bunch of really powerful tools at the end people that they can use constantly if things come up. I actually think that sort of Expo's moat compared to some of our competitors is that because of this, we're looked at really as just part of the client's team a lot of cases. Now, of course, we're vendors still. It's not like we're getting hired full time for these companies, but we're really, really deeply integrated with the team. And often we have so much institutional knowledge that even when later on they might bring a full-time CFO or full-time controller come in, that person will usually keep us around just to be able to ask us questions and sort of help in some capacity because we know the business really well.
Oh, absolutely love it. By the way, you can learn more about Kevin Gwynn White by going to expogroup.com, expogroup.com. Speaking of taxes, Kevin, part of what we do here is we run a company called Capital Gains Tax Solutions, right? And so the founder scales from millions to billions or millions to tens of millions, and they're exiting this highly appreciated business.
Yeah.
You're in M&A, right? And they're facing this massive capital gains taxes. New York, New Jersey, California are some of the worst or the highest tax states, And so my question for you guys, when people are like, hey, Kevin, I'm about to exit, it's a 20, 30, $50 million deal, and I'm about to get crushed with 30 or 40, 50% of it being with capital gains tax depreciation recapture. What are you guys doing? What are some creative solutions that maybe you are putting on the table for these founders?
Yeah, good question, and it's tough, right? Like so much depends on what state you're in, and sort of what whether you're going to get taxed at sort of income versus actual capital gains rates. And what we always say for our tax planning group is you just got to start really early. You got to start tax planning years in advance, right? If you're starting to talk about tax with a tax professional the year that you've decided to sell your business, it still is helpful, of course. You always want an expert to come in, and there's going to be things that they can do to work with you. But the sooner that you can start that planning process, the better, because there's all sorts of laws and statutes that depend on each state. That if you've done certain things years in advance, you actually can create a pretty powerful tax shield for yourself. But I encourage anybody who's even thinking about, maybe I want to sell my business 3-4 years down the road, start talking to someone now. And that doesn't mean you have to engage them full time to do anything for you yet, but just to start talking to experts to understand what that sort of tax planning looks like so that you can set yourself up for success.
Yeah, I could agree with you more. We just had a $17 million business exit out of California. It was like one of those digital billboard sales, right? Where they have all
Yeah.
the digital billboards all over. And so for them, they're facing a lot of 40% capital gains tax. Their basis is zero. They're going to have to get crushed, right? And so we built what's called a capital gains tax exit plan just about 30 days before exit. You can set these up, but you're right, you need to set it up before the close of escrow for sure. And they were
Yeah.
able to have the funds go into a trust, and it pays them back slowly over time. And it can diversify. In fact, they put a lot of it into NVIDIA stock that they bought at the right time and has shot up way up. They're investing back into businesses in the future when the deals make sense. But I found that the strategy is also going to be flexible for the founders, right? Because it's one thing just to defer the capital gains tax, but if you can't have the freedom and impact that you want to have with the wealth or create more wealth, then what is it to the entrepreneur who wants to start another business, right? Start another real estate or invest into real estate or diversify. It's got to be flexible. So talk about the importance of just having flexible capital. Even if they want to go into as a VC or if they want to go into a deal with a partner and someone else. But I mean, I feel like capital is like the thing that people are starving for right now. But if there's not a flexible way to move it with tax deferred, it's tough to get a lot of these deals done. So, what's the importance of flexibility for the entrepreneur these days?
Yeah. Now, it's interesting. Those are some interesting ways to sort of defer the tax with the trust that you just mentioned. But I've also seen a lot of entrepreneurs maybe start a nonprofit shell, put something into a 501(c). Maybe there's work that they actually care about, that they're actually able to sort of defer some taxes that way. But at the end of the day, yeah, I think you just need to figure out what works best for you and what your wants are. If you're not really interested in running a foundation or pursuing some nonprofit, obviously that's not going to be a fit for you. If you want to start doing investing, likewise, doing something where a trust that pays out over time, that's great. You might be able to defer some of those taxes, which is incredibly helpful in the situations where you have these big payouts. But certainly keeping some capital aside where who knows what you might want to do after you sell a business. Very, very common that we have, and a lot of the investors on our board were former entrepreneurs that just did really well. And they had a big exit and they had a ton of capital, and they started out just doing some investments with people they trusted because they had a really good network. And then sort of after that sort of escalated, and more people said, "Hey, I want to work with you." And before you know it, they're running sort of their own little fund. We've seen that a bunch of times. So yeah, I think it's just being honest with yourself. What does my life want to look like, sort of post exit, and what are the things that I really want to do with my money. Sometimes our ideas change about those things, so having sort of that extra capital and flexible is really important.
Yeah, absolutely. I can agree with you more. If people want to learn more about what we do, go to capitalgainstaxsolutions.com. It works for Bitcoin, works for business sales, real estate. No 1031 exchange required, and super flexible for the entrepreneur who wants to go back into their own deals, or just be passive and invest into passive investments, including stocks, bonds, mutual funds. A lot of people have been sitting in lending funds these days, making about 10% on the money. You can go to capitalgainstaxsolutions.com. So, Kevin, what question haven't we asked you yet as it pertains to numbers and systems and processes that that to get in place, and maybe give the benefit, like if you can put these things in place, you're setting yourself up for success to exit, right? Especially if you want to have that exponential exit, you've got to have and attract institutional buyers. You've got to have institutional systems, processes, numbers, right? Walk us through a little bit of that.
Yeah, no, that's exactly right. You hit the nail on the head. So the one thing when I was on the buy side, actually sort of looking at potential investments, the biggest red flag for us, if they were a little bit later stage, is that we would ask for good financial projections or good thoughts about how the business is going to grow and progress over time. And we got really weak forecasts that maybe didn't tie to their historical accounting. And look, these I'm not saying that would be a deal breaker all the time, but it frequently was, right? Because as you get to the later stages, that becomes increasingly important. I think some entrepreneurs that are in the really early stage, call it $2 million of seed investment, you can get away with that for a while. But if you start sort of take that attitude into, $10 million plus of revenue, start fundraising, you're going to get asked a lot of really hard questions by potential investors, and unless you can come up with quick answers that make sense and actually follow a well thought out financial model, and you can explain your projections and why you're growing and how you're growing and hire, are you a B2C company that's going to use these creative new marketing channels to increase your, cost per or decrease your cost per acquisition so that you can grow faster? Are you a B2B company that is really focused on, small to medium sized sales and you need lots of different sales resources in order to do that? Are you focusing on enterprise sales where you need one major rainmaker to bring in? So really thinking through that becomes actually a critical point for fundraising as you get into sort of the growth equity space. Getting answers to those questions really quickly is important to investors. So I definitely encourage folks not to neglect that because it's more than just not necessarily having good financial statements that you can trust, which is of course important, but it starts to jeopardize how quickly you're able to close a funding round.
Okay, that makes total sense to me. You've got to get your stuff in order, and you don't want to take it for granted. So, at what point, if you've scaled to millions of dollars of revenue, 1 million, 2 million, 3 million, 5 million, like, is there a point you'd say, okay, you're still not there yet to work with Expo Group, but at least 1 million in revenue, or recurring revenue? Like, walk us through, like, revenue wise, is there a kind of a sweet spot to bring in Expo Group to start to build these things out on a really intentional way?
So I'd say it varies. I think that the most common entry point for us is that there's institutional capital in, the board's really intense, and they just need some expert support to come in and sort of manage the board and manage potential investors. That can mean different things from a revenue perspective at different levels. So we have some very few clients, but we have a couple clients that are pre-revenue, but they've gotten a ton in funding because maybe they have really specialized IP or they're sort of in stealth mode, but they're got a tremendous amount in revenue growth really quickly. So definitely have worked with some pre-revenue companies. More commonly, I think if it's something down the fairway like a software subscription company, I would say that we usually enter at the sort of 2 million mark would be sort of the earliest stage. More commonly, probably 5 to 6, somewhere around there. But certainly, we would begin if the company was smaller. But it really comes down more toward how much help do you actually need managing your investors? How much help do you need fundraising? How quickly do you want to fundraise? Right? Getting an outside expert, whether it's Expo or somebody else who really knows how to run a good process, can make all the difference between getting money in a 3-month period from when you start the process to a 6-month period. And so if you're worried about runway, it helps.
I love this. So let's dive into how to manage investors. So walk us through, so let's say someone's managing $100-200 million worth of private capital, and so they're looking to expand that, and they're like, wow, like reporting numbers, even forecasting, right? I don't know. I'm thinking like a real estate syndication group or a fund manager. Do you work with like real estate funds and they're growing exponentially, and you're like, okay, now we've got to make this even more systematized? Any examples of that, Kevin?
So we don't work with real estate specifically, but we definitely work with growing boards. And it's funny, all boards are different. I've been in so many board meetings I've lost count. You've got board meetings where you have one really wealthy person on it that just really trusts the CEO, and so they tend to go pretty quietly and smoothly. You've got other boards where it's a little league soccer game, and you have 15 venture capitalists all sort of running for the ball to speak during the board meeting. Seen that; those are challenging too. So we've definitely, and as you grow over time, you might add more board seats, and so your board will grow, and the type of people and the type of questions that get asked in your boards will radically change, right? We work with Goldman and on some of their growth equity clients, and they're bringing us in for sort of, closer to lower middle market, mid market type investments, where we're the crack FP&A team supporting a new CFO coming on, and that's a very different board meeting than a $10 million top line sort of VC company. But we try to help CEOs scale and understand the nature of the board and how they're changing. So I think we're a really powerful asset to first-time founders, especially, and not just us, anyone who's got that expertise, because you have to grow and evolve a lot as your board does. So once you're past a certain mark, or if you have a major institutional growth equity investor come in, you'll have a non-stop questions in the financial model, finance budget, what the budget actuals are. So, we definitely scale and grow over time as the board changes and try to support the CEOs in that process as well.
Gosh, my mind has been expanded, Kevin, Gwen White. There's so much that we don't know. I think this is a classic example of hire the who, don't be the how, right? And be humble and be like, hey, here's where I'm at. Like we went from 1 to 5 million in revenue, and we want to be able to take this to another level. That's what I'm hearing. That's what I'm seeing and experiencing. Just you sharing this wisdom with us. We are out of time. Are you ready for the lightning round?
A lightning round. Yes, I'm ready.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one gold nugget and make sure to tell yourself to do?
Man. I think it's you network above all. I think that's sort of the biggest piece, and maybe something that I didn't really understand in my 20s is that the people that you're surrounding yourself with are the huge difference makers for you. And if you can surround yourself with really bright people and you find yourself in a company where you really respect all of your peers, you're definitely on the right track. That's the fastest way to sort of climb the ladder and get smart really quickly.
Beautiful. Question number two. Number one book you've recommended or gifted the most in the past year?
Ooh, okay. One of my favorites is Deep Work. So Deep Work, it really focuses on how to actually get really difficult work done, and how to essentially eliminate distractions so that you can really get into something, and make it special. That's so challenging to do, and that really changed my perspective on the way that I even manage my calendar. So now if there's a major project that I want to work on, I'll block an entire day off and just sort of really get focused on it and eliminate distractions. It's made a huge
So
difference.
good. Who's the author of that, Kevin?
The author is Charles Diggs. I had it on my
All right.
had it in my bookshelf. I'll go look.
Charles Diggs. I'm definitely checking out the book out. I love that. Next question. I guess it's a two-part question. Number one is how do you best use ChatGPT right now? And then number two, what's the best maybe AI alternative to a QuickBooks for the guy who's not quite at the million, 2, 3 million in revenue? He's still is there like, okay, I would go to Zoho Books, or I would just is there an AI one that you like out there that's like is a little more advanced, that's or I mean it's not as so advanced where you're going institutional, but it's better than the regular QuickBooks?
Ooh, yeah, good question. So I'll answer that in two parts. The first is the ChatGPT. So yeah, we've found a lot of use cases for ChatGPT. We find that you can get a tax GTP. That's really good for looking up, different tax laws, different statutes in different states. That can be really important. One thing that we struggle with sometimes, and I think all finance companies are at the moment, are dealing with sales tax because it's changing so rapidly, right? Like if you look at even a couple of years ago, the landscape was totally different. Now a lot of services companies, they don't realize it, or sometimes they don't want to hear it until there's an audit, have to actually submit sales tax, whether that's a software as a service company or a business services company. You actually are on the hook for sales tax in certain jurisdictions, and you'll have nexus when you don't realize you do. So using ChatGPT to get reasonably up to date information on that has been really critical. And then even using it in terms of complex Excel formulas. I see my transaction services team do that all the time, right? They're thinking about how they want to do revenue reconciliation, and they're pulling it from 7 different data sources, and they'll ask ChatGPT to write an Excel formula to do certain things, and it actually performs quite well, which is pretty impressive. In terms of integrations, AI integrations of existing accounting softwares, all of the softwares obviously have started to rush to get AI implemented. QuickBooks, for instance, it will, as you're doing expense classification, it will suggest what expense it thinks it actually should go to in your chart of accounts, and if you're running through that process, that can help speed it up. NetSuite does something similar now. I would still say that full AI automation for accounting is not there yet. I think we're a couple years off from it, or where it's 80% of the work is taken away instead of 20. It still struggles with. Let me give you an example. All the systems across all systems, something like transaction costs of a fundraiser or an acquisition really should be a contra equity account a lot of times in accounting. And if that's the case, you need to know not when that legal expense comes in that you need to code it to your balance sheet, versus another legal expense that's coming in as the exact same bank memo, might have been from your same law firm, could have been on contract work, which actually would hit your OPEX, right? So that's a nerdy accounting example, but I'll give it. And so that's where AI really hasn't kind of caught up yet. And I don't think there's enough data input points at the moment, the way the current sort of software is structured, to get really, really good at that. But I know that, all these accounting companies are really focusing on it because it's obviously the future and they want to figure out how to make it work.
Okay, cool. Great wisdom. A couple other questions and we'll wrap it up here. Number one leadership quote or theme that you strive to live by?
Oh, man. Let's see if I can get this right. So there's a Winston Churchill quote that, and I'll paraphrase because I don't remember the exact wording, but it's planning is everything, but plans are useless, right? Effectively is what he's saying. And I think that that's so important. That has guided sort of the way that I've grown my business over time, is that I voraciously try to plan and come up with sort of how I'm going to attack problems over the course of the year and think way, way ahead. The bigger your company gets, the more you're stealing an oil tanker. And if you want to start turning left, you got to start 2 months in advance in some cases. So yeah, I think that's really been indispensable, making sure that I'm thinking about what the future plays out like, but also nimble enough to know that if a plan doesn't go exactly the way I think it is, or new information arises, to just scrap it and start over, right? I don't think it makes the planning process useless at all, because there's so many things that you're thinking about and you're driving strategy when you're doing that. You just can't be married to doing things the exact way you want, because so many things will change.
Awesome. Great wisdom. Kevin, first of all, I want to thank you for being on the show, sharing a ton of wisdom with us. I think we got some key things about scaling, about systems, about wisdom of when to put those systems into place, and ultimately how to become better founders and scale from millions to billions. You're a perfect guest for the podcast. I want to thank you for being on the show. Keep using your gifts and talents to help people do just that. Scale in a way that can make a big, big impact for themselves, for their family, for their team. For the listeners who want to get in touch with you, would you mind one last time? What's the best place for them to find you?
Yeah, that's expogroup.com. That's EXB as in boy, O group.com. There's a contact form on the website, and we've got lots of people who reach out through that. So you can go to the website and find us pretty quick.
Fantastic. And I also want to thank all of our listeners for listening to another episode of the Build to Billions podcast. Again, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling is to learn from people just like Kevin, who have a ton of wisdom and that can help you scale from millions to billions in a very efficient way. Ultimately, so you can give more, all of it away, to causes you believe in most, make a big difference, make a big impact. I want to encourage you to do that, to take some wisdom today and apply it. My name is Brett Swartz. I appreciate everyone listening out there. Please rate, review, subscribe to the podcast. Leave a comment that could also encourage somebody else. And of course, if you're looking to exit a highly appreciated asset, a business, real estate, Bitcoin, cryptocurrency, multi-billion dollars of gains, and you want to build a capital gains tax exit plan, go to capitalgainstaxsolutions.com. That's where I'm the founder, and I would love the opportunity to work with you to see if we could help you exit in a way that's going to help you multiply your freedom and impact with your wealth. Appreciate everyone watching or listening out there, and we will talk to everyone again real soon. Bye, everybody.